At first glance, this looks like the perfect property. The view is spectacular, the water adds value, the location feels irreplaceable. Most buyers will stop their analysis right here. And yet, properties like this can become some of the most vulnerable assets in an entire region. Not because of the house, not because of the construction, and not because of the river itself. The real danger is something most buyers never see, because flood risk isn't determined by what surrounds the property, it's determined by what happens beneath it. After more than 20 years managing major infrastructure projects, I've seen buyers spend millions evaluating architecture, finishes, and views, while completely misunderstanding the land those homes were built on. And when that mistake is discovered, it's usually discovered too late. Today we are going to examine 3 physical realities that determine whether a waterfront property remains resilient or slowly becomes unanswerable. Because the most dangerous flood risk is rarely the water you can see, it's the water bath you can't. Let's do a simple test. Look at these 2 properties. The first sits just a few meters from the river. The second sits almost 1 kilometer away. Which one would you buy? Take a second. Most buyers choose the second one. Honestly, I probably would have to, because it feels safer, farther from the water, farther from the danger, right? Not necessarily. After a major storm, the first property stays dry, the second floods. Why? Because water doesn't measure distance. Water follows gravity, and gravity only asks one question: where is the lowest point? If your property happens to sit in that low point, every drop of water from the surrounding land is heading in your direction. That's why experienced investors, owners' representatives, and construction experts don't start by asking how far is the river. They start by asking where will the water go. The dangerous part? Most buyers never discover this during a property visit, because on a sunny day, both properties look perfectly safe. Now let's take this one step further, because sometimes the river isn't the problem, the land is. Imagine you are visiting a property. The grass is green, the ground feels dry, everything looks normal. You walk around the land, you check the boundaries, you look at the view, and leave convinced you have found a great opportunity. The problem? You may have just missed the most important detail. A storm doesn't just fall on your property, it falls everywhere. Every roof, every road, every garden, every field. Millions of liters of water suddenly needs somewhere to go. And water always asks the same question: where is the lowest point? If your property happens to sit in that low point, you may have bought something most buyers never notice: a collection point. Your neighbors see a garden, nature see a basin. This is why flood damage can sometimes feel so unfair. The water isn't coming from the river, it's coming from everywhere. From higher ground, from nearby roads, from surrounding land, and eventually it arrives in the same place. The dangerous part? You can visit the property 10 times, 20 times, maybe even 50 times, and never see the problem, because the system stays invisible until the conditions change. And by the time most owners discover it, they already own the property. Let's say you buy the property. The first year goes well. The second year goes well. Nothing floods, nothing breaks, everything looks fine. Then a letter arrives. Your insurance premium has increased. Not by much, just enough to notice. You pay it and move on. The following year, it happens again. And then again. At first, it feels like an annoyance, a normal cost of ownership. But here's the question most owners never ask. What are the insurers seeing that I'm not? Because insurance companies don't make decisions based on feelings. They make decisions based on probability. And when they believe the risk is increasing, they react long before the market does. The property still looks exactly the same. The view is still beautiful. The river is still beautiful. The neighborhood is still beautiful. Nothing appears to have changed, except the numbers. And eventually, those numbers start changing everything. Insurance becomes more expensive. Financial becomes harder. Buyers become more cautious. Liquidity starts to disappear. That's why experienced investors don't see insurance as a cost. They see it as a signal that the market may be discovering a problem before they do. Because in real estate, the first consequence is often not physical, it's financial. Now, here is the interesting part. Not every property loses. Some survive remarkably well, even when they face the exact same storm. Look at these two houses, same area, same weather, same flood event. One suffers major damage, the other is back to normal a few days later. Why? Most people think resilience is about strength. It isn't. It's about design. The owner of the first property planned for a sunny day. The owner of the second property planned for a storm. That single decision changed everything. One of the first things engineers look at is elevation. Not because it sounds technical, because gravity never negotiates. Water always moves down here. This is why the finished floor level matters. In simple terms, how high is the important part of the house above the expected flood level? Because when water arrives, height becomes protection. The smartest properties don't try to fight nature. Let's go back to where we started, the perfect waterfront property, the stunning view, the calm water, the dream investment. No one of those things are the problem. The mistake is believing that's the whole story, because flood risk is not really about water. It's about understanding the forces acting on a property before they become visible. And by the time those forces become obvious, the consequences have often already started. Higher insurance costs, fewer buyers, lower liquidity, more uncertainty. Long before the first flood reaches the front door. That's what makes these risks so difficult to spot. The property can still look beautiful. The view can still look perfect. Nothing appears to be wrong. And yet the system around the property may already be changing. That's why experienced investors don't just evaluate the house. They evaluate the land, the water path, the elevation, the environment, and most importantly, the future. Because real estate is not just about what a property is today. It's about what the property will still be tomorrow, 10 years from now, 20 years from now, 30 years from now. The best investments are not always the most impressive. They are the ones that continue to perform when conditions change. The environment doesn't care what a property is worth. Water follows physics, not price.